Hi, I'm here from Action Coach. Today we're meeting with Belinda Radford from Innovate. She's a mortgage broker who works with a lot of homeowners and business owners alike. And so I'm here to ask her I guess the most important things that she's come up against with talking to small business owners with respect to their finance and keeping their business alive. And so I've just been talking to her, and apparently it's all about cash flow and keeping the business alive, hardship, and also what the bank's looking for future investments going forward. So keen to find out what your thoughts are, especially with respect to cash flow and what you're seeing with your businesses and things like that.
Sure. Yeah. So the main questions we're getting from clients at the moment are about their cash flow, especially for the businesses that have been hit pretty hard with the changes in the market.
Tourism and restaurants and things, but
yeah, that's right. Yeah.
But most of the guys I work with are largely trades, but so they're less a hit on that front. But there's a couple that aren't. So
Yeah. So there's
how can you help them, or what are you helping them on?
Yeah, there's a few really good options out there at the moment. So one really quick and easy way is to get an overdraft facility, but it's also worth having a look at your existing home loan as well. If you refinance your existing loan, there's a lot of very, very competitive rates out in the market at the moment. And there's also some cashback offers. So you might be able to refinance, save potentially $1,000 a month on repayments, as well as getting some extra cash directly into your pocket. There are some government grants available. You may have heard about the $250,000 business loan. We have found that was relatively restrictive. So just because it's been offered out there doesn't necessarily mean that it's right for a lot of our small business clients.
I haven't found anyone particularly interested in that, I have to say.
No, we're not getting a whole lot at all. So there are certainly some options out there and some quick and easy ways to improve your cash flow without having to disrupt your entire business. So it's really worth having a look at those.
Yeah, okay. So interest rates, what should people be on out of interest for home loans? Loans?
Realistically, you shouldn't be on over 3% anymore. There's rates as low as 2.09% for a fixed product. Variable rates, we're looking sort of between 2.5 to 3, depending on how many features you want on the product. But every bank right now has some really great offers. There's certain banks that we're finding are really hungry for business right now, and they're really, really putting some pretty great things out there. So $4,000 cash back, for example, and that $4,000 might be enough just to kind of get you through the next few months.
Yeah, gee, maybe I need to talk to you more about that. But with bank overdraft or business overdrafts, does the same thing apply? If they come down, and what should be interest rates apply to those now?
So interest rates on business overdrafts are really dependent on the business itself and the bank you go with. They are still going to be a higher rate, and it will depend as well whether or not you have the option to do a secured facility, and which some businesses will have that option, others won't. So that'll be, there's quite a few more options out there for that. So you probably want to have a chat to your broker about your personal situation on that one. But they're very quick and easy to set up. So they're a great short-term option for a lot of our clients.
Righto. So you're suggesting they are still worthwhile reviewing, I guess, your overdraft, because a lot of businesses put them in place maybe and then don't use them or haven't reviewed them for a long time.
Yeah, that's right. And we're really cautious about using overdrafts as a reason to get some extra cash. If you don't have that money available, an overdraft is potentially going to put you further behind, and that's what we want to avoid. So they're great for a rolling cash flow assistance, but if you're needing 50 grand today, an overdraft isn't necessarily the way to do that. And it is really dependent on every business.
Okay, a bit more complex than what we can cover right now.
Possibly, yeah.
But a topic that's come up several times, and that I've done this with several businesses I'm working with. We've pushed out, or we've had a holiday period on equipment finance, or vehicle finance, or home loans, or all of them. How does that impact their ability to borrow in the future? And is it a good plan? And have you got anything to discuss around it?
Yeah, sure. So one thing that's really important to note is that there has been an agreement industry-wide that hardship will not affect your credit rating. So normally if you did fall behind for a few months, there would be some issues down the track accessing finance. If it is a coronavirus-related hardship that you're on, it won't affect your ability to borrow in the future. In saying that, though, they will take it into consideration still. So, if you have been on hardship because of this, and then 6 months from now there's still some struggles, the banks are still going to use a common sense approach there to make sure that they're giving finance where it is appropriate. What a lot of people need to keep in mind as well, there's a big difference between a repayment holiday and an actual hardship application. So a repayment holiday is probably less relevant for equipment finance, but for a home loan, for example, you would look at, if you're already ahead on your payments, you could stop making payments, and it would just use the money that you've got available in your redraw to make those payments for you. So it does mean if you've got, for example, $20,000 ahead, 6 months from now, you won't have that $20,000 available like you do today. So they're not cancelling the repayments that are required. They're just saying that we'll use your redraw instead of using your own cash. The other option is a hardship application where they will put a pause on your repayments. This one, it's really important to understand that that doesn't just cancel repayments for 6 months. They will still be charging interest during this time. So if you're making no payments at all, your interest isn't going to be, isn't really going to be working for you necessarily. You'll be paying that higher amount of interest over those six months. And then your repayments at the end of that as well will increase. We have seen a tiny bit of success in the equipment finance space where they will actually extend the loan term for a further 6 months.
Yep.
So that's been really great. It's been not a huge amount of that, but we have had a bit of success there. But with a home loan, they will keep your 30-year, 20-year, whatever it was initially, they will keep that contract. Right. So if you don't pay for 6 months, those 6 months will need to be made up after that period.
Well, so they're a much longer term loan than equipment finance. So
yeah, that's right. Yeah. So you might see as sort of an average, your repayments might increase by maybe sort of $50 a month after the hardship period is over. So it doesn't sound like a huge amount, but if you know that this is going to be a long-term cash flow issue, that $50 a month isn't necessarily going to be the greatest option as well. So you just want to make sure if you are looking at hardship, you really have thought about how it looks long-term rather than just looking for a quick fix that might help you out today.
Yeah, well, some people do need help out right today, so
yeah,
whether they like it or not.
Right. Yeah, exactly. So with that, we really just want to make sure that they're aware of what the long-term effects will be, and where it is the right decision, then we're absolutely happy to help out with that.
Okay, great. I guess lastly, I mean, with respect to going forward, I mean, what are banks are looking for? Is there any changes there or anything we need to be aware of?
Yeah, so we are seeing there are still a lot of banks out there that have an appetite to lend. They're really hungry for business. And then there are some banks as well who have pulled quite back. So what we're seeing, especially for small business owners, it's not going to be as easy to get finance. It's not as simple as a quick letter from your accountant and then you've got money in your bank. They do want commentary around how your business has been affected by coronavirus. That's a big one. So, and it's a worthwhile exercise as well. If you're needing some finance now, you do actually want to know how that will affect your business. So buying that extra piece of equipment, what effect will that have on your cash flow short term and long term? The banks, I guess, are also just wanting to make sure that they are making the right decision. So they are asking a lot more questions than they normally would. What I would suggest to people here is that you speak to a broker who uses a holistic approach. So it's not just your equipment finance and it's not just your home loan. Find a broker who's going to look after your entire financial situation. So we know that businesses have, they've got families to look after and themselves to support as well. And they've got their customers or their clients and their business to run. So you want to make sure if you're making a decision for your business that it is also the right decision for your family and vice versa.
Well, of course. All right. Well, there's some great little nuggets in there. So I appreciate that you can join me, I guess, and give me your thoughts. If there's anything more you want to talk about or ask Belinda from Innovate, I'll include her details below. You're welcome to contact her or just ask me. I'll give you her details. You just need to change your phrasing is that you can talk to me, Belinda, rather than find a broker. So thank you for joining me.
Sure. Thanks very much.
See you then. Bye.
Okay, bye.